trading options on Robinhood may seem confusing, but it's actually super simple. And by the end of this video, you'll be ready to do your first Robinhood options trade. But stay tuned to the end of the video because you'll probably not want to do an option trade after you see how it works. So I'm in my Robinhood app. So if we wanted to trade options, we would choose a stock. So the stock that I'm going to choose is Marathon Holdings. This is a stock that mines Bitcoin. So you could look at Bitcoin. If Bitcoin's going up, this is probably going to go up. If Bitcoin's going down, it's probably going to go down. You could also do these option trades when you hear news, like if a CEO did something stupid, you could think the stock's going down and buy a put. Or if you think a company is going up, you could buy a call. So how do you actually do it in Robinhood? So we're going to go over here. So it's going to say trade. When you press trade at the top, you're going to see trade options. There's ladder, short, and then buy. Buy would just be to buy the stock. Trading options is what we're going to do. If you don't see this trading options on your Robinhood account, you may have to upgrade to a higher tier Robinhood account, but it should be right there. So now we're going to press trade options. Press this. So now it may look really confusing, but it's pretty simple. The dates are when it expires. So if I bought one for the 10th, that means it is expiring Friday. So the farther you go out, the cheaper they're going to be because there's more chance of what you want to happen to actually happen. So let's just say I wanted to be risky and buy this one for Friday. So you could either buy a call, buy a put, or sell a call and sell a put. So if you are selling a call or a put, you're going to either you're going to need 100 shares of the stock. So I'll teach you that in a different video. Right now, we're just going to buy a call or buy a put. So basically what you're saying is, I think this stock is going to go up, so you buy a call, or I think this stock is going to go down, you buy a put. So I'm going to do one right here. I'm going to do one right here in this video, and you can see how fast I'm going to lose money, or you can make money really fast. These are extremely risky. Once you buy it, the time starts ticking and it decays. So if stock stays the same, you're going to lose a lot of money. If the stock goes in the wrong direction, you're going to lose a lot of money. So let's look at the stock. Stock right now is at 1860. It looks like it's going up, so maybe it'll go down. So now I'm betting that it's going to go down. I'm going to go to trade options. So now this is for the 10th, and now I am going to buy a put. Make sure you choose the right one. I just had to edit this video because I bought a call by accident. So a put is if we think it's going to go down. So right now I'm buying a put for $8.50, hoping that it's going down. So I'm going to buy 2 contracts. So right now the most I could lose is 58. The most I could gain is $1,642. Sounds like a bet I'm willing to take. Just always double check these before you go through. So buying a put for Friday. So this has till Friday. If it doesn't go down to $8.50 by Friday, all my money is gone. If it goes down below $8.50, I can make a lot of money really fast. So we're going to review it. And now we're going to buy it. Keep in mind, if you're just starting out and you have a small Robinhood account, you could only do 3 day trades within 5 days. So I'm on my last one. So if I sell this today, I can't do this anymore for a couple days. Done. So now you see, as soon as I did that, it's going down. So this is my option right here for $8.50. So let's see how it reacts. We'll get back to it to see what happens. So now what would happen if you thought it was going to go up? Well, you would do the same thing. You would trade options, pick your date, and instead of buying a put, you would buy a call ahead. So $8.62, if you think it's going to go up to $9, you could buy it for $58. If you win, you'll make money. If you lose, the worst thing that can happen is you'll lose your $58. Just remember to sell these by the expiration date, because April 10th, you really have no chance. The more days and the more time that goes by, the less valuable it's going to be. So even if it does go down, I could still lose money. Now, there is a safer way to do options, and that is called with covered calls, but you will need to have 100 shares of the stock. And if you want to see how I do covered calls and make income without this crazy risk every single week, check out this video over here.